Thank you very much.
Thank you, Jonathan, and thank you everyone for coming this morning. I know regulation is simultaneously the least favorite topic, but most important, so we're happy to have you here, and yeah, we're excited to get underway with this discussion with our panelists. Feel free, everyone, to introduce yourself, although we have the names up here, so that's saving us some time. So I'm just going to dive straight into it. You know, it's been about 4 months now since the ESMA rules went into effect that highly restricted, you know, the offering of retail CFD margin trading based, you know, financial products in the EU. So we're going to find out how brokers have reacted, you know, what the effects have been, what the projections are for the future, and you know, what the outlook is. So having said that, I guess my first question I'd like to pass here to Duncan. You know, what has been how have brokers reacted to these changes? You know, obviously there's the professional trader status here that I'm sure everybody is aware of, but what has happened beyond that in terms of, you know, the reaction, you know, 4 months in so far?
Okay. Just to start, strong regulation is good. Bad policy making affects everyone. And I think everyone knows what I'm talking about. This ESMA ruling, I believe, is counterproductive. As far as Tickmill is concerned, and I can only speak for Tickmill, although some of the stats play out for the whole industry. Tickmill UK is ultimately a match principal broker, so we have seen a reduction in funded accounts, a reduction in comms, but what we have seen is an increase in average account funding per se, yeah? So lower leverage, people are funding their accounts more, but it looks like they are trading less at the moment. Now, I think the stats going forward will actually mean, once everything's settled down, revenues, volumes will start picking up again. And I think we can relate this back to Japan and various other bodies that we've seen this sort of thing happen in the past.
And how significant has this impacted your profit margins?
In terms of profitability, yeah?
Right.
Yeah, I think at the moment, on a quarter-to-quarter basis, I think our revenue's down about 40%.
Oh my God.
And Anton, do you have comments in terms of how you know, much it's affected your business within the EU for EU clients?
Right. So our business was affected a little bit more than the 40%. I think the profit margins went down, like in Europe, by 4 times. The average deposit went up, as Duncan said, but less traders are willing to deposit this kind of money in order to trade in the same conditions that they had. We also seen a lot of traders going to unregulated entities, and they actually said it to us, guys, we are leaving you because some other guys can give us the same leverage as it was before. So I think this measure was like non-effective at all, because the traders find the leverage that they want in other entities, and the European market is going down.
Right. This was actually a point that was brought up earlier today in a discussion where, like, when the U.S., you know, put in a similar measure nearly 10 years ago or so, they restricted the U.S. clients from going offshore. But here now with these changes since ESMA, EU clients could just go to any other broker outside of the EU, and there's really no, you know, nothing preventing that. So how do brokers deal with this?
We watch from the side.
From our perspective, all our European clients stay in Europe. It's as simple as that. You start pushing them towards other entities, you're only going to ask for trouble.
Right. Absolutely. And you know, many providers in this room, you know, I imagine deal with EU brokers. From a show of hands, How many of you work with EU regulated entities, EU brokers, or technology providers? Okay, that's about maybe a tenth of the room, or 15%. So, you know, is there more interest now in obtaining EU regulation, as it's a stronger, safer market with these regulations in place, or are, you know, companies looking to set up shop elsewhere? Maybe, Maor, you have any comments on this, working with a lot of brokers?
So I know of 4 SciSec licenses for sale. The price is free, just take it. So I don't know if that answers your question. Just to give you an overview, my name is Maor, I'm the founder of Panda. For the last 12 years, we are a technology provider that provide the broker all of his technology needs, but in the last few days we also started to do advisory. So we are able to look on the numbers of 80 different brokers, and we see that definitely the amount of traders are much lower than before, but it's all because of the start of the funnel. Most of the traffic is coming from the affiliates. Affiliates are not able to convert. The brokers are unable to achieve a higher lifetime value, so they are unable to pay the affiliates the higher CPA, and the affiliates are sending the traffic to an offshore entities. So it's all starts from the beginning of the funnel. Some brokers are not affected because they are heavily relying on call centers, and the call centers are making the trader in some way a professional trader.
Right.
So it doesn't affect all the brokers. And most of the brokers, I believe that if there was a margin between what is required and what is actually done, I think brokers are stretching the limit in order to stay profitable.
So what about the professional trader? Are you know, brokers trying to actively help their clients become professional traders, or just change their approach and target, you know, professional clients out there that maybe haven't signed up yet? You know, Duncan, what has your approach been so far with the professional designation for traders who qualify?
I think it's pretty binary. You are or you aren't. You know, it's a 2 out of 3 choice. If you fit it, that's fine. But you can't curve fit. Right. I mean, one can, you know, push around the boundaries fractionally, but again, it's not worth it. The rule was put there to ensure that you're either retail or you're professional.
And are you trying to help the retail traders maybe one day become professional traders if they, you know, are successful and they do enough trading and, you know, their portfolio grows enough, you know, to qualify, or, you know, the other factors?
I mean, if they can prove that they are, then they can. You know,
is the regulators in the room? Just to know.
Any regulators in the room here today?
No?
No?
You can speak.
It's okay if you were here. I'd like to ask,
but that's the case. Why put yourself in an environment where you're going to be liable to the regulator? It's sure. Pointless. It's short-termism, and it's not worth it.
And what about the payment space? How has the payment space been affected, you know, with ESMA regulations? Have you felt the effects much?
Oh yeah. Hi, my name is Avner. Good morning. CEO of ZotaPay. And ZotaPay Gateway Payment Hub is connected to more than 300 acquirers. So we have a very good feeling of what the Visa, MasterCard, Cardsteam network and how the acquirers are treating it. We can say definitely it's the same changes the broker has. We've been witnessed the same as going through on the acquirers. Visa and MasterCard has prohibited not only the European traffic and European, besides the EU regulation, and all the offshores are prohibited currently to process. As Maor mentioned, it started from the traffic and affiliates that much harder for them to conduct their marketing, and it's much harder to process transactions today with Visa and MasterCard. Visa in the last 2 weeks or the 1st of December has changed its policy towards unregulated FX brokers. When I say unregulated, also offshore regulation, excluding the ASIC. So any broker that used to have a Belize license, BVI, Cayman, Bahamas, whatsoever, and most of the brokers out here has both EU and non-EU entities. So the acquirers today just prohibited, just shut down, terminate accounts of the offshore entities. And it's a very big problem for, let's say, a big group that has several licenses, that suddenly the acquirer, if it's from Europe, can support only the European license, meaning only the European traders, where traditionally they could have submit one application, but the entire group could have enjoyed better pricing, better approval ratios, and so on. So today, the regulation from the trader point of view is also focusing on payments and how to block from their side unnecessary transactions.
So there's a lot of friction if you have an offshore entity, even if you have a regulated one in the EU or elsewhere, if you have an offshore one, there's a lot of friction there on the payment side to get the deposits in for your clients. Michael, do you have comments along those lines?
Yeah.
With regards to payments?
Good morning, everyone. Thank you for all being here so early in the morning. I bet most of you didn't still have your coffee. I'm still having it here. Sorry for bringing it, but you know, Cyprus style, I'm always late going everywhere. So let me light up some fires over here in this case. Every story has two sides. So every coin has two sides at the same time as well. So yes, we are looking at a market that is becoming more heavily regulated, and especially in the European Union under the ESMA. Hatzakis is suffering indeed. The registration of new SIFs has dropped substantially, more than 50% in the past year. But I do not take that as a necessarily bad thing. You know, the market is becoming saturated, it's becoming fragmented, it's becoming over-cluttered. We all, I think, whether you're an operator or a payment industry provider, we all started in a level playing field where it gave us the chance to develop and create this market and start harnessing out of the Forex and out of the platform and the fintech industry overall. Well, I believe it's time to up the game. It's time to make the rules stringent. It's time to become more strict. It is, I know it does sound a bit harsh, a bit cliche, but why am I saying this? If you don't push operators, if you don't push Forex providers, platform providers to up their game, to evolve, you know, evolution happens when you push the frontiers. So if you don't actually embrace this and try and find ways of working with this environment, and again, the natures of law is survival of the fittest. So you need to decide, are you going to belong in the fittest that are going to survive and up your game and evolve your platform, become really what is called true fintech? Or are you just going to keep considering, you know, we've got less leverage, we've got less profitability. Yes, we've grown into dinosaurs learning of how to make excess profits out of a new non-regulated market. Well, suddenly now it's more regulated. Suddenly we need to fine stream our revenues, our profits and everything, and we need to up the platform game.
No, this, excellent points. This is actually my next point I was going to lead into is what are the pros and cons of these changes? You know, we've talked about so far some of the cons of them, but what are some of the benefits? Like Duncan, could you share, you know, how could we look at these changes positively in terms of the leverage reduction? There's been talk of it helping clients to potentially not lose as much. How could we argue a case for, you know, why this is good?
We have a negative balance protection now for clients. That's mandatory. By funding your account with more money, the likelihood of actually going to negative equity is diminished. So it's actually negative balance protection now is counterproductive.
So if someone was going to get stopped out sooner with higher leverage, now there's a chance they have more money in their account, there's less leverage, so there's a bigger buffer?
Yeah, if they're going to get stopped out, they get stopped out, and the chances of going into a negative balance is reduced massively. But you also have to sort of relay the fact that these clients now have to put more money into their account. And by putting more money into your account, you are actually increasing your capital risk. So you need to ensure that you actually go to a half-decent broker that allows, a broker that is well capitalized, that has got a good track record, and it's going to last, because you start funding your account with significant amount of money, and they may not be there the next day.
Right. Anton, what are your views on the positive benefits of these recent changes, the reduction in leverage, and the?
I think we became more client-oriented in some ways. Like probably the client will trade much more time, even with more risking more money. But I think with the leverage that we have now, I think the lifetime of the client will increase like dramatically. When client before the restriction could lose it all like in a month, now it probably won't happen.
So better for the client relationship and lifetime.
Yeah, the lifetime of the client should grow. We will see it in a year from now, but this is my expectations. And also, I think that from the time of the restrictions, we started thinking about new products, which will push the innovation in this market, and I think it's also good. And clients will get new products that they can try and.
Such as Anton.
Actually, if
not
I
at the moment.
Let me add up to this with Anton, because
a small teaser.
I was with him in a think tank, in a small focus group last week, and one of the things that the companies in this industry are trying to do, like Anton, they're trying to make more professional traders, which will understand more the rules of the game and how they're meant to actually invest, rather than just become addicted to high leveragers and have, as he said, a small lifespan. While making it more of an experience and an ongoing trend, rather than just an addiction to doing it on a daily basis like it used to be. So we need to move away from addiction into experience, knowledge, and something which is going to be ongoing. And that's one of the things we were discussing last week.
Excellent point. So I think this leads us to the next topic of client profitability. Now since the ESMA changes, brokers have to show the percentage of their clients that are losing money overall. And while I feel that this information is still very new, I would imagine you need a track record of a year's worth of data or two to gain meaning from it. How meaningful is it, so far when you see that a broker, X percentage of their clients lose money, or whether that percentage is high or low? How meaningful is that? Duncan, what are your thoughts?
Well, it looks like the industry standard is somewhere between 76 and 80% on a quarter-by-quarter basis. But what it doesn't take into account is what the client is doing on the other side with his other investments, with part of his portfolio. So I would say it's not meaningless, but it probably doesn't send the right message. Right. How you actually create those sort of stats is it's up. You can interpret them in any which way you want, but.
Do you think those numbers could improve as the risk management tools maybe get more sophisticated? Like we've seen with some of the copy trading social platforms, the percentages are a little better because those traders might be following someone else who's been using a strategy that's more tested. How does the risk management tools...
It's an interesting point. I think if you look at copy trading, the possibility, if you find a good copier, but there again lies many problems in trying to find the guy who actually makes the money and having those results verified. Yeah? Right. But I would still posit that we give it a little bit more time, see what happens. But I wish those numbers could be, I don't know, worked in a different method to allow for the fact that a client is hedging a position in some shape or form. Right. So he's not losing 80% of his portfolio with FX. He's actually making money. And what would happen in the next quarter when the actual results are plus 10% or plus 30%? What's the regulator going to do then? should it happen.
Wanda invented a trick. I will share it with you. Please use it. You put an interest rate on the accounts, and all the dormant that usually is 30 or 40% suddenly are profitable because they have interest. So there is a lot of ways to manipulate those numbers and to split them into segments. One other comment that I wanted to say is that in order to do a lead scoring before we allocate the leads in the CRM, we ask the call center guy asked the client if he's looking to trade, and 8 out of 10 told no, I want you to trade for me, or I want to make money. Right. And I think that a new product, specifically investment product, going back to the basic, if it's the PAM, the percentage allocation money management that was popular, will go back, because most of the people don't want to trade, they don't want to learn how to trade, they just want to invest. And I think professional trader will go to bigger brokers, and definitely even the fact that the SciSec are for free, let's say, definitely the ones that will be able to innovate will conquer the game.
Interesting. So the structured products for Forex. And just going back for a second, does this tie into some of the benefits maybe of the leverage reductions where Forex could become a more established household investment, like, you know, in Japan where, you know, people, it's very common for people to invest in FX, or like in the US you have mutual funds and other parts of the world. Could Forex become a more household investment now that it's potentially safer?
Yeah, I would like to start saying it all starts from somewhere. This new ESMA, Basel II, GDPR, it all started from somewhere. And the same as this universe started from the big bomb or whatever. The same as we had 3 or 4 years ago, like gigantic companies like Alpari and FXCM vanished in 90 seconds. Billion-dollar companies just vanished because of negative portfolio leverage on a certain currencies. So this is the biggest pro that I can think of that can eliminate this from happening again. At a full STP broker, that gigantic billion-dollar company that just not existing after a minute and a half when you reopen the platform again. There is nothing.
Yeah, basically the regulations are helping actually not to have such collapses again, and to kind of protect the investors and the market. It's like I would, in my simple mind is, sometimes I correlate the difference between the European market and the US market. I mean, in the US market, most of the money and most of the economy is driven by the markets and by the trades in the market, while in Europe, most of the market is being driven by the banks and by the loans and by the credits given out. So I think it's, at the end of the day, it's, again, touching this mentality of the European traders and the European market as a concept in a whole, where people should be investing more in the market, and that's either going to be done, as you correctly said, by professional services and by portfolio management, rather than just trying to create an addictive game where people are just trying to gamble and make spikes or cliffs.
I must say that I don't agree. I think that any broker can open an account with another broker and have high leverage because he's a professional trader, and he can have a negative. It's not a negative balance for the end users, but the broker can lose a lot of money on his margin account. In the US, the regulation killed the industry. So I think we should look on it as global warming is just happening, and we need to adopt. And definitely there are opportunities, but the regulators don't know, unfortunately, how to regulate properly. They don't know what happened in the system. The brokers are few steps ahead. Right.
And I think
that's
it's
the
normal.
main issue.
Right, that's a good point.
And let's talk about crypto. What about regulation in crypto?
We're going to get to that in a second. I just wanted to say that, Maor, that's a good point of, you know, the regulators are always lagging, so, you know, innovation happens first and then the regulation comes after, so that's a valid point. And
it's the scam happened first. And then
that's right, that the scams happen first, those drive the regulations as well, in conjunction with, right, the innovation happens first, then the scammers come in, then the regulations, so that's the cycle, I guess, well put. And Avner, you raised the great point of brokers' capitalization, because with the Swiss franc event, when when Alpari went out of business for their UK entity, excuse me, and FXCM had that emergency loan they had to take, and the whole world was shocked with brokers, some having substantial losses. So, do you see maybe, and this goes to anyone on the panel, ESMA maybe, or somewhere in the EU, like in the UK, raising the capital requirement for a license? Because compared to other jurisdictions, it's or at least to the U.S. where it's 20 million. Do you imagine capital requirements going higher?
Yes. The I mean, part of this ESMA sort of event was this negative balance element, and the FCA said we think you need to be a 730k firm from 125k. Did we? Probably not. Did we become a 730k firm? Yes, we did. And I can see the regulator and all regulators in Europe doing similar things to ensure that firms are more well capitalized. But that's a good thing in the end, as far as I'm concerned.
I will just say one thing. Yes, it can go higher, but yes, we offer like a tied agent solution for someone to come and open a brokerage without putting the deposit. So I don't think it will go higher, because if it will go higher, it will just create such a consolidation that will cause entities just to move out from the EU.
Sort of what happened in the US 10 years ago when a lot of brokers left. But there's still a consolidation coming, even though the capital requirements aren't being raised because of the margins and the revenues falling. Now that leverage has been reduced for these, for retail Forex brokers. Agreed?
I think that probably small broker companies will close down because they can't afford to buy clients. We cannot see at the moment that the cost of the client reduced, but the margins are. So probably small brokers cannot afford it, and because somebody is paying this price for the clients still. So probably it will happen. That's my point.
So, well, basically, you're asking in this case if ESMA should be raising its prices or how it's going to move towards this direction. I'm going to turn this question on its back, and I would say, being in England and all, and being a bit I don't support any politics, but say a Labour's approach would be, what happens with an association or with lobbying groups and with representation of all of these European regulated entities being organized and representing these things and lobbying against ESMA or even promoting the regulations towards some other direction? I mean, correctly before you touch the cryptocurrency market, which actually has very, very strong lobby groups now in the UK and associations which are promoting its legislation and regulation and how the market should evolve and develop.
The Crypto UK?
Yeah,
right.
Yeah.
And the CFD Association, I think they had significant lobbying and gathered many signatures.
But most of the things are like, I think something is happening wrong because of the members. They're not getting enough voice through to ESMA. I don't know if that is because the lobby group doesn't have the necessary means to communicate things to ESMA, if they're keeping it on a segregated basis, because ESMA is now even in the risk of losing a lot of the passporting rights between the member countries. Each country is going to go on a supranational level and develop their own policies when it comes to passporting. So I think that the lobby groups should be stronger in this case, and the members in each country should be supporting or giving in ideas and making more think tanks, and actually, rather than trying to keep regulation back, they should be helping it to evolve the right way rather than the wrong way.
Could this be a part of a more global, trend of regulators kind of following each other, and like IOSCO, committees getting together and talking about, and of course, maybe a lot of their decision is maybe driven because of all the scams out there and other unregulated places, or even in the EU, France would be putting out announcements of all the scam sites, and mostly none of them are regulated, so they kind of gave everyone else a bad name. Could this be part of a global trend?
I would say that the ESMA or the European Union as a whole lost its attraction for brokers, And I'm quite shocked to hear these two respected brokers losing such big margin to the same business itself. And it's almost a death penalty for most of the brokers. It will be consolidation, or what we can see today, that the majority of the traffic and users and focus is moving out of Europe. So developed regions or undeveloped regions such as Southeast Asia, Malaysia, Indonesia, Thailand, Vietnam, even China and Japan are still in the major focus of brokers to the new era, where the regulators are not as strong or as restricted like in Europe or UK post-Brexit. And margins over there are still very profitable. Leveraged is still the same over there. And the acquisition of a client is more or less, I would say, stayed more or less the same in terms of cost, and not in Europe, like changed a lot. So we see at least shift of a lot of brokers, big brokers names, the mega gigantic, are not working in Europe or not mainly working in Europe anymore, going outside, whether it's to Southeast Asia, Latin America, CIS regions, even so Arab countries.
They're shifting their resources elsewhere, basically. They still have their European operation, just they're getting a higher ROI on those other...
But if I may add on to that, sorry for interrupting, but because Avner comes from the payment industry as well, like we do, I totally agree with you, and it is a trend happening, but I will even take it to the other extent that we're facing, ourselves as payment providers, we're facing some challenges that has to be considered by you guys as well as operators and CFDs and Forex brokers. Now, the thing is that, yes, companies come to us to go to third countries, to non-regulated markets, and really push payment companies to give them solutions. We try to respond to the market, and we try to give solutions for the third countries and non-European. But then again, your backbone was made in Europe. So most of the companies began out of Europe. So they want to keep business within Europe. And I'll lift the carpet now and say what's beneath it. And a lot of companies now, which had a European license, they used to create their subsidiaries or mother sister companies that used to belong to BVI, Seychelles. Well, I'm not going to say Vanuatu and all of those jurisdictions now, but yes, they did used to create those, and they created those to trade in third countries. Now, we're using those companies, the Forex brokers and the operators are using it to trade within Europe to European customers by not really soliciting, not really advertising, but you want more leverage, just click here. You guys know you're doing it at the end of the day. I mean, I'm not going to just hide and say this is not happening. So this is happening. And as you said before, the ESMA regulation didn't catch up with this yet. And they have like a little window which says, European traders are allowed to trade if they're not advertised to a third country URL or MID. But the BRAM of Visa and MasterCard you said in the beginning have already caught up this on the radar. And they're shutting this down. So
we could see a wave of maybe actions, maybe next year or, after a while.
Definitely ESMA is going to catch up. So again, rather than finding a solution, long-term solution, whether that's going to be on CRMs, on fintechs, on platforms, on long-term trades, on, as you said, portfolio management, we're again trying to find small quick fix solutions. Let's just do this for a while now and see if it goes up till the next problem, until we hit the next wall. All right, yeah, okay, it's your decision.
Michael, I think that the demand for high leverage will be there. And it doesn't matter how many restrictions there will be from ESMA or from other regulators. The demand will be there, and even if you go to US, you can find brokers which you can trade with high leverages, and the market will stay. So
professional traders?
No professional, for everyone. Even in the US, you can find a website which you can trade with high leverage on your own risk, but that's and the guys who are providing these platforms taking the risk of being judged by the US. But the market is there. It's not going to disappear. Even if you move to, I don't know, portfolio management, the market for this kind of product will be there. So it's either you regulate it correctly, or you are giving the guys who are willing to risk putting themselves in jail at the end doing it. So I think that there are two sides of it. The market won't go away.
No, definitely, the market's not going to go away. It's a point of making it less of a gambling instrument or just attracting everybody in the market rather than just, being more specific and finding a product which is giving experience and is giving better trades or portfolio management, as we said in the beginning.
Right. Well, I think in the EU, at least with the professional designation, you could still access higher leverage, as opposed to it being outright banned, except just for the retail clients. So it sounds like the beneficiaries of some of these changes have been a lot of other jurisdictions where either clients will go to or brokers will allocate their resources towards those other jurisdictions. But going back to my earlier point, what are some of the other positives maybe that we'll see from this in the EU that could help, customers as well as brokers and, make it better for everyone?
We need to think about it. No, at the end of the day, it's against the trader, because if the business becomes less profitable, brokers will need to create this profitability using structured product that affecting the clients or actually increasing the spread size. The only thing that is good is that the industry had a really bad reputation and a lot of companies that are operating not just as an unregulated entity, but in an inappropriate manner. And the fact that Visa and MasterCard and from a lot of ways, things are getting close for those guys. I think that's the best thing, that the reputation of the industry in general will go up.
Duncan, I'm sorry.
I would say that the binary option, if what you started, has ruined the industry, and something had to be done first of all. And obviously you had some brokers over there that inappropriate brokers, which helped us all to get to this point. Having said that, still the leveraged, let's say the leverage tool itself is not real. I'm not sure how many people here has $100,000 cash in their accounts in order to send to the broker and execute 1 to 5 or 1 to 10 trading, so that at the end of the day they can fill their trade. I'm not sure how many. However, like I say in CFD and stocks, if you have the money, you can buy the stock. If you have $100, you can buy $100 stock. You don't use other tools. It's more real. It's what you have. It's what you buy.
Right.
And I think it's the first step towards consolidation between the cryptocurrency and the FX together, so that you cannot really leverage on the cryptocurrencies. So this is the first step, foundation, to be able to really trade on the cryptocurrencies the same level as you do for Forex CFDs.
So it sounds like you're saying that this could help, make it a more trusted asset class as opposed to just some high-risk, gamble, so to speak. Excellent. So having said that, I guess we should move now into crypto a little bit. And, there's been a lot of interest, obviously, worldwide in trading the actual. We saw a big rush into CFDs, crypto CFDs, since last year. Duncan, what could you share with us about, what's changed, how that's gone, and what you expect to come?
Yeah, I mean, from our perspective, in December, cryptos, especially Bitcoin, was the 5th largest instrument traded. Today, it's not even top 20.
And what do you think the reason for that is?
It's been hanging around the same price for a while. The run we saw was great, and as a trader, that's what you're looking for. You're looking for a trend. And now, leverage 1 to 2, I'd buy the physical. Right.
And have these been mostly Forex traders that have been trading? Have you seen a lot of new type of client types?
We did see new clients coming in, but again, it's Forex. If it moves, it's a viable product to trade. And I think we've got to distinguish between investing, long-term investing, if you want to buy a share, fair enough. But if you want to trade, you want to trade. And it comes back to this point about bringing money in and out. If you don't want to be sitting with a shed load of cash on your account, if you're only going to trade for a short period of time, you want to put that back into your bank. and then back again
it's
when you want
like
to trade again.
the mentality with a lot of crypto traders where they don't want to leave their crypto on an exchange. They just want to trade and then withdraw it so that if the exchange goes out of business, God forbid, they're protected.
As a trader, yes, that is a typical process that one would go through. And it's managing your capital risk. I come back to the same point. But as far as cryptos goes, they'll be around, but trade physical.
Right. Excellent. Well, I know we're running short on time, so is there anything else anyone would like to add on the topic of crypto, CFDs, and their effect on Forex brokers in the EU now that the leverage, they got affected the most with the leverage restrictions down to 2 to 1. Does anyone have any closing comments on that?
I would just add that there is a Bollinger Band application indicator that a lot of traders use that they can also buy the consolidation and sell it. And what I'm trying to say is that there are always ways to trade. Okay, there is a rumor in the industry that as the volatility goes low, the traders don't trade. It's because the brokers don't give them, it's not helping them to trade with signals or education about trading. The crypto, again, it's the beginning of the funnel. Facebook and Google and all the advertisers stopped the crypto. The affiliate couldn't send those traffic to the brokers. Those brokers couldn't make them traders. We still see crypto funnels, but it's mainly for acquisition. The smart brokers are actually introducing them to trading Forex or CFD.
Excellent.
And as a last note, based on the findings that you correctly said about the drop in the trading cryptos, I don't know if just thinking out loud, if the ICOs and a lot of the tokens and cryptos issued by every different Forex and broker company has actually decreased the value in a specific cryptocurrency because each one is issuing their own. I'm just thinking out loud. But then again, the solution I would say to that is just like if mimicking the market that I come from, which is a banking market, that banks and the banking industry has created the Ripple, which is they're trying to trade between them and overcome the swift trades. Right. I don't know if that should be, if there should be like a unified currency, cryptocurrency, between the brokers where most of you would be exchanging it between you and being using that instead rather than each one issuing their own ICO. So it's just as a...
No, that's a great point. Probably beyond the topic of this panel in terms of like whether brokers should use a permission ledger or one with a native token. It's definitely a very complex discussion. Anton, do you have any closing thoughts on crypto?
I think at the moment the most problematic thing, if you are using like crypto and given that your clients trade real crypto, is the banks. When they see that you have real crypto, they're just closing your account. So it's a big war that
they don't know
bad.
how to,
so you can just provide crypto CFDs while investor in crypto, he doesn't want a crypto CFD. He wants a real crypto. So it's like a circle that ends.
Yeah. Interesting.
And not in the interest of the broker, of course.
Cryptophobic banks, isn't it? It's like.
So I think we'll open up. Oh, I'm sorry.
I would say one last thing. I'm more focused on China. I lived in China more than a decade in that market, and I can feel in my senses that the cryptocurrency is going to go back in China big time. They started already the first act, Sandbox. Whoever is reading the Hong Kong Act. They started a new cryptocurrency exchange law in a sandbox manner under the supervision over there. And I believe the same as they blocked Google and they made their own Baidu, blocked Facebook and made their own WeChat or WhatsApp. We are about to see in early 2019 a new cryptocurrency in China. Bear in mind, the whole Bitcoin and what we are here speaking about started from China. They lifted, then they crashed it again. So they know what they're doing, and I believe they will be again in the game really soon.
Excellent. Yeah, I think it's going to be interesting to see what how the regulatory pathway, evolves in the EU, in the US, and Asia. Excellent. So we could open it up for questions. If anybody has any questions, we could take a few. So any questions? We'll give there we have a question. We just need a microphone.
let's upload the Slido and see if we got anything interesting. I know we have one question which we pretty much covered. Can we? Okay. Just a minute. We're still learning the mechanism here. So. Okay. Well, I can tell you that the question is, do you believe that Australia will eventually adopt the ESMA margin changes that we saw in the UK and Europe this year? If so, and you had to guess, when? The winner gets a free listing, ASIC, I guess.
Yes, 12 to 18 months.
You think this year Australia is going to adopt the ESMA? Yeah.
That's my guess, yeah.
No, I don't have an opinion, to be honest, about that one. It's true that there's a lot of targeting in Australia and in terms of regulation. I think it's going to take a bit more than a year, but it's very near. Yeah, it's going to be a bit more than that because I think they're afraid as well not to have the same problems that they had in Europe. So they might adopt some of those policies. I think they're taking into deep consideration different brands from Visa and MasterCard as well in Australia. So they will be taking everything into consideration in this case. It won't be just ESMA. I think it's going to take just a bit more than a year to consolidate the whole thing, but eventually they will be collaborating between them because most of the European companies do expand there.
And we now go to yes, no, and a time frame because we're a bit short in time. If anyone has another guess to add, we'll hear it, and if not...
A little bit what?
Oh, okay. No, I see there are no additional guests, so thank you very much. Thank you for listening. It's been a great panel.
Okay, can we take the question?
Someone doesn't use Slido. Okay, sorry, yes.
Okay. Yeah, my question is, it's a little bit complex. I would like to know if any of the people on the stage can mention if they had to drop out any products from their product list, and if they can mention what was the percentage of loss in business from dropping out this product, and the percentage of loss in business in those products for which they had to reduce the leverage.
To repeat the question?
Can you return the question?
He asked if you had to drop any products since the ESMA regulation, correct me if I'm wrong, and if you did, it's a complex one, what was the percentage of loss, roughly?
Yes.
And there is
it's a full due diligence when you think of it.
There is an extra piece. If they also can mention the percentage of loss of business from products in which they had to reduce the leverage, such as Forex or stocks.
So basically you want to know the products that we just took out, like we took binaries out, and the percentage of loss, if I understood right. So it's big losses, let's say like that. I cannot mention the numbers. Of course, if you take out the main product of our brokerage in Europe, so the losses are huge. And regarding Forex, as I said before, it was about losing margin 4 times, so it's the same.
He's no longer with us.
Yeah.
Did I answer?
Well, the payments part in it, in case of losses because of the change in the market. Yeah, definitely. We've seen European volumes go down, but we've seen third country volumes go up with other jurisdictions. It's not a nice picture, but yeah, it even seems out at the end of the day.
Perfect. Great. Thank you very much. Give a round of applause to our speakers.
Hope it was not too boring, yeah.
We're very insightful. Thank you very much.